Namaskar, Sharad Chandra from Mehta Equity. Recently, we have been seeing that there has been some correction in the Indian market over the last few weeks. We have corrected from 19,950 to coming down to below 19,300. So this is about 5% correction, which is obviously expected when the FIs have turned negative and have withdrawn 10,000 crores from the Indian equity markets. Now, there are several fundamental reasons for some level of concerns on the global front. The first big concern is that China is slowing down. Recently, one of the big real estate companies have also filed for bankruptcy. And plus, you have the structural problem with China, which is an aging population, and to that extent, the economy cannot grow at a much faster pace at which it has grown in the last few years. We have also seen there's a problem on the global front because of the geopolitical situation, which has led to a lot of pressure in terms of cost for the European economy, and that's why you have seen a couple of economies in the Europe going into recession. US also does not paint a very bright picture because the Fed has been talking about controlling inflation. They have done several hikes, and they may continue to do a couple of more hikes, and which obviously puts a big risk as far as the US economy is concerned, which is the risk of going into a recession, and probably that will happen in year 2024. As far as the domestic economy is concerned, obviously India is doing reasonably well. We are growing at a reasonable pace, and I think 5-6% growth rate in India should be quite achievable. But next year, obviously, we have the election, and so to that extent, certain level of uncertainty relating to political environment is obviously going to get crept in. We are trading at a serious multiple premium to the emerging markets, and to that extent, which makes investors wary that should they pay such a high premium for Indian markets. So going forward, what I believe, obviously markets in India are on an upward trend, but expecting a 5 to 10% correction is nothing which should not be uncalled for. In every bull market, there are corrections which can be as deep as 10% or more, and so the best advice to investors is to invest in good quality stocks at reasonable valuation. I think currently the deviation between large cap multiples and the small cap, mid cap multiples has increased quite significantly. So I'll prefer that people should invest in large caps, which has been one of the steady and the safe investment options in the long term. Thank you very much. Happy investing.